All right, welcome to The Explainer. Let's get right into it. The crypto market is, well, it's bleeding out. And I know what you're thinking. Is the party over? Today, we're going to decode the warning signs that have the bears roaring and the bulls, well, they're running for cover. I mean, look at the prices. Bitcoin and pretty much every other crypto asset just keeps falling day after day. So, is the bull market over? That's the billion-dollar question, right? You can feel that chill in the air. And, some of these charts, they're starting to look spookily similar to past downturns. So to really figure out what's going on, we need to look at the evidence, right? We're going to break it all down piece by piece. And we're starting with the big one, the technical signals that are just flashing bright red for Bitcoin. Okay, let's kick things off with Bitcoin's bearish signals. There is a whole barrage of technical warnings. And the analysts who are calling for a bear market? They're pointing to a whole list of these technical indicators. Their argument is pretty simple. These charts are screaming that Bitcoin's powerful momentum, it's just finally run out of gas. First up, let's talk about timing and history. And what's really wild here is how it feels like we've seen this movie before. I mean, this bull market, it's getting pretty old, actually running longer than the historical average. On top of that, the price has smacked right into a huge 7-year resistance line. Think of it like a ceiling that has just stopped previous rallies dead in their tracks. And yeah, sure, past performance doesn't guarantee future results. But come on, patterns like these have traders everyone on high alert. All right, next, let's look at some classic chart patterns that traders have been using for like decades. And we've got a big one. A death cross has formed. It sounds dramatic, and well, it is. It's a really bearish signal. Bitcoin's amazing parabolic price curve, that's officially broken. And maybe the most important signal of all, Bitcoin has closed below its 50-week moving average. Historically, that's a huge red flag. It's like a major support line just got completely wiped out. But here's the thing. It's not just about lines on a chart. We're also seeing some really telling behavior from investors. The big players, the whales, are starting to sell off their huge stashes of coins. That is a classic sign that they think the top is in. And then there's this other really weird thing, a final surge in an old altcoin, Zcash. Why does that matter? Well, it's spookily similar to exactly what happened right before the last two massive crashes. Kind of gives you the chills, right? So you might be thinking, okay, but is this just a crypto problem? And that's a great question. Because all of these red flags for Bitcoin, they aren't happening in a vacuum. To really get the full picture, we have to zoom out. Because the stress we're seeing in crypto, it might just be a symptom of a much, much bigger economic problem. All right, so let's talk about that broader economic storm because there are some serious cracks appearing in the system. There are more and more signs that the wider economy is under a lot of strain. And that could be creating a really tough environment for everything considered a risk asset. And you better believe that includes crypto. Okay, get ready for this number. 655. That's how many U.S. corporations have filed for bankruptcy just this year so far. That's not a small number. It's a massive spike, and it's basically a giant blinking sign telling us the economy is in real trouble. And if you look at where these bankruptcies are happening, it gets even more interesting. It's not spread out evenly. The top sectors are industrials and consumer goods. Now think about that. These are the parts of the economy that are super sensitive to things like supply chain problems and people cutting back on their spending. They're basically the canary in the coal mine for the whole economy. And you know who else is worried? The big dogs on Wall Street. The CEO of JP Morgan, Jamie Dimon, had this great quote about it. He said, "If you see one cockroach, it means there are probably more." Chilling, right? What he's saying is that these recent company failures, they aren't just one-off problems. They're likely a sign of a much deeper, more systemic issue lurking under the surface. So, if we stay on this path, on the current trajectory, corporate bankruptcies could actually hit a 15-year high. Let that sink in. We're talking about levels we haven't seen since back in 2011, right after the great financial crisis. This isn't just some abstract number on a chart, folks. This is a sign of real economic pain that could absolutely spread like wildfire. So, okay, we've got bearish signs in crypto. We've got a storm brewing in the wider economy. What are investors actually doing with their money? Well, let's track where the capital is going, or more accurately, where it's fleeing from. And wow, the money is definitely talking, and it is screaming, get out. Look at these weekly outflows from crypto ETFs. In just 1 week, a staggering $2 billion was pulled out of crypto investment products. That's billion with a B. Bitcoin ETFs got absolutely hammered, taking the biggest hit, but Ethereum investors were running for the exits too.
So why is everyone pulling their money out? Well, the primary drivers are pretty clear. First, nobody knows what the central banks are going to do with monetary policy and interest rates. That uncertainty is spooking everyone. And second, we're in what's called a risk-off mood. That's just a fancy way of saying investors are ditching anything that seems speculative and running toward things they see as safe.
And all of this brings us to one absolutely critical number that everyone, and I mean everyone, is watching right now. $86,680. What is that? Well, it's the realized price for people holding Bitcoin ETFs. In simple terms, it's the average price they all bought in at. If Bitcoin's price drops below that number, it means the average ETF investor is officially underwater, and that could trigger a whole new wave of panic selling. It's the new line in the sand for sure.
So is this just a dip, or is it a real downturn? That is the critical question. We've just looked at a mountain of bearish data, right? From all those technical charts in crypto to the scary bankruptcy numbers in the wider economy. What does it all mean when you put it all together?
When you have all these bearish signals in crypto and you have these big storm clouds over the wider economy, what happens next? I mean, this combination of internal weakness in crypto and this huge external pressure from the economy, it leaves us with the million-dollar question. Is this the dip you're supposed to buy? Or is this the beginning of the end for this bull run? Honestly, only time is going to tell. But she can't deny, those storm clouds are definitely gathering. If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. More news in our Telegram channel in the first comment. See you next time.